I wanted to talk about the different tax changes that have occurred since the beginning of the year. There's still a lot of people that are scratching their heads. Okay, this is the first year it's come into play. How do I prepare for it? What are the different things that I should do as a taxpayer? And Zach, as I'm saying this, I'm saying to myself, David, why didn't you think to have an accountant, a CPA on today's show? Why didn't I do Zach, hold on. We got to get back to the show. Let me get this phone call. Just a moment, please. This is David Crossan with the lighter side of finance.
This is Chris Whalen, CPA. I just had the feeling there was a tax expert needed.
It's amazing how that works. You know, it's not prepared at all. You just happen to call in. Chris, thank you so much. Chris Whalen, CPA. We really appreciate your time and calling into the show today.
Sure.
Well, Chris, I have a lot of questions, and I'm going to try and get as many in as I can with the time that we have. Big question. A lot of people are asking me about what is the New Jersey Tax Amnesty. What's going on there? Can you explain it and its time period?
Sure. It's pretty straightforward, and some of us have lived through some of these before. It's let's say you're a taxpayer that has an old tax debt in New Jersey that's been accumulating penalties and interest and haven't been able to pay it off. So this will allow you to pay the tax without any penalty and only some of the interest during this 90-day window of time they're going to give us. They haven't given us the time yet. Probably will start somewhere in October. Let's say, for example, you're a non-filer and you have many years of corporate tax or personal taxes, and you've been hesitant to file knowing you're going to have interest and penalties there plus the tax. This is the best time to get together with someone like me to get those taxes done, to, of course, pay the tax, but minimize the penalties and interest. It's a great opportunity to save a lot of money, and everyone should take advantage of it.
So it hasn't been announced when it is, but your feeling is it's going to be sometime in October, just before the end of the year.
All right. The governor who's pushing for this would like it to be over by the end of January. So they haven't picked a starting date yet, but the 90-day period, no matter what, should end by the end of January. So the program will definitely be enforced soon, and this is the time to get the work done. So we have it in the can. So whenever they announce that first day that the eligibility starts, we can file immediately for you.
So for any taxpayers that are in this situation, they really should be looking for a meeting, if you will, with their CPA, or at least have a conversation, say, hey, when is a good time for us to meet? So the sooner the better, I would think.
Yeah, always, of course, yes.
Chris, I have to ask you this. There was talk about for tax filings going forward that they're going to simplify the form and actually make it like a postcard. Can you talk about that?
Right. Well, that's been in the news the past couple of weeks. And, you've seen Trump on TV holding up a postcard. And, sometimes I've been accused of being too much of a Trump supporter, but I'm always very honest about how do things impact us at the street level. So in this case, there really isn't any simplification happening with this. So what Trump did is, in order to make the tax form, the 1040, a postcard size, he needed to eliminate some lines and sections from that. So that sounds like a great idea. We're simplifying, but not really. He simply took some sections, actually 6 of them, from the 1040 and moved them now to separate schedules. So the work still has to get done the same way it used to be. Now we have these other forms now that are sort of a link between your data and your 1040 that now flows to that postcard. So it's not simplification. It really is sort of smoke and mirrors in this case to make it seem like he's simplifying, but it's really not simplifying at all. So, but for most people who file electronically, the size of the return doesn't really matter. If you think about it, it's all electronic. So it could be the postcard. It could be the size of the Encyclopedia Britannica. It doesn't really matter. So it really doesn't do anything but give him a press, something in the press to say he's doing something towards tax simplification, but he really didn't do that.
I really appreciate you bringing that up and how you've explained it, because I think a lot of people thought by doing this, it's going to make it so simple for them that they're not going to need to lean on a CPA or accountant. But what you're telling me, it's just how it's being presented, but there's a lot more to it behind the scenes. It's not as simple as it's being shown.
Right. And there are still, if you have a very simple tax return with just a W-2, well, that's a return that you might have been able to do yourself anyway. So this doesn't make it easier for more people to do it on their own. Let's put it this way. Because, for example, if you have one schedule of these new 6 schedules, so it makes it more difficult in a sense. Sometimes people are going to have more than 1 or 2 schedules. So it doesn't simplify it for a general taxpayer. But some of the changes we talked about in the last time on the show, we have some changes to the itemized deductions and some limitations there. There might be people who don't need to itemize anymore. That might make them a little simpler. But I don't have a lot of those people in New Jersey that are my clients. Most of my clients are still going to itemize. Just to let everybody know, that most likely if you itemized last year, if you had a home in New Jersey, some wages, income, you're probably going to still want to itemize to maximize your deduction. Some people are believing that, we can't itemize anymore. Housing prices in New Jersey are going to plummet, and all of these. This is not true at all. So please, we need to see your itemized deductions because they're still there. We're still going to maximize all of your tax deductions and minimize your tax.
Chris, I want to shift gears. You and I have spoken in the past about how these tax changes are impacting individuals, families. We've even spoken about how it's impacting large corporations, bringing the tax rate from 35% down to 21%. What I'd like to talk about now is how is the impact with these tax changes on small businesses?
Very, very important. This is so important that Trump did give a corporate tax break to large corporations to bring money and jobs back to the country, which is happening. And so, but he also is giving a great benefit to small businesses. Now, we don't have the exact rules that the IRS will be promulgating, but basically, small business owners might get a 20% reduction in taxable income up to certain income limits. So, for example, a real estate agent is a very good example, depending on your level of income. So we really need to plan for this, and there's different ways to calculate what's called qualified business income. It's a new term that's being used. So there's tremendous changes. This is in my career. I did my first tax return 31 years ago in college. These are the largest changes that impact you and your family. Let's say that you're going to get this deduction. You might be paying too much in estimated taxes right now. So you really need to get together with someone now, not in January or February. That's much too late to plan for this year's taxes. Just as you know, with your financial planning, I urge everyone, you need to see David much more than once a year, especially when you have a complicated situation.
Chris, you and I have talked about this before, but I think it is so important when people are looking to give to a charity, give a donation, looking to get a deduction before the end of a given tax year. So, here it comes November, December, you're seeing a lot of these donations to charities. But you brought up a great point last time you were on the show, talking about creating a method, if you will, or maybe a systematic way of giving money to charities now or throughout the course of the year, because this is really the time that they need it the most. Can we talk about that?
Yes, it's we do a lot of work for nonprofits, 501c3s, and before I did that kind of work years ago, I never would have thought of this. But me being enmeshed in their daily and monthly accounting, they get plenty of money from Thanksgiving to Christmas, but in the spring and summer, their bank account is empty. So I urge everyone, if you're thinking of giving and you're going to be giving this year, start giving right now. I have people who they give to church every week. That's fantastic. But start giving in the spring and the summer. That's when they really need the money. The coffers are pretty empty. And also consider doing something on a monthly basis. So let's say you want to give $100 to a charity every year. Well, why not go in and do an automatic payment out of your bank account, something simple, the first of the month, send $10 to your charity of choice every month. They would love that. They would love to get something on an even kind of level during the year.
Chris, let me ask you. So we're talking about different deductions and, creating a method or a system, if you will, systematically giving or trying to give at the beginning of the year, middle of the year, so they're not waiting to the end. But let's talk about when it does get to the end of the year and different charities, people are giving cash donations. We talked about the need for receipts with certain deductions, but can we talk about situations where we are giving cash? How to handle that when it comes to any deductions for your taxes?
Well, anything that you give, any cash donation that you give is a deductible item for you. So many times, though, there's been all of this news in the press and all this fear out there that if you don't have a receipt, you can't take a deduction. And that's not true. Like, for example, when I go past the Salvation Army bucket at Christmas, I can't get a receipt for that. So people are not taking enough of the charity that they give. So make a note of it. If you can't get a receipt, that's fine. You making a note of the day and time and who you gave money to and when you could have. And you want to maximize, because that's still 100% deductible for everybody, is charity. That has not changed. So everyone should take advantage of that. If you have fear that you need a receipt, don't have that fear. Just keep good track of everything, and it's going to save you a lot of money at the end of the year. I have a really good blog post on my website, which is chriswhalencpa.com. Go to the memos page. There's a charity blog post. If you can't find it, email me. I'll send it to you. And I've did a lot of research as to how much charity people are giving on average, depending on their income levels, because people want to know, what do people give? What's average? What causes an audit? That's always the question. Well, I don't know if something will cause an audit, but I can give you information as to what your neighbors are spending on charity and what they're taking that are pretty average amounts that really don't cause a flag.
Chris, here's a big discussion. I mean, we can just get into it in a simple manner when it comes to divorce. And this is what I want to bring up. I understand in 2019, when it comes to paying alimony and receiving alimony, it's going to change in what can be deducted and what is going to be considered income. Can you talk about how it is right now and what that adjustment is going to be come 2019?
All right. So for divorces that are finalized by the end of this year, so by December 31st, 2018, any divorce that has alimony included within that is going to be handled the way it always has been. So someone that's giving alimony is going to be able to take it as a deduction. Someone that gets alimony will have to pick it up as income. That's how it's always been. And for cases settled through December 31st, that's still the way. But cases settled after that, those rules are changing. Alimony is no longer deductible for cases that are settled after December 31st this year, and you don't have to pick up the income. So this is a very important tax planning tool for people that are in divorces right now that aren't settled yet. If you're going to be paying alimony, and you're sure you're going to be, you really want to make sure you get that divorce done by December 31st, because we want to be able to deduct it. If you're going to be receiving alimony, we want to postpone it if we can till after the first of the year, so you don't have to pick it up as income. So again, talk to your attorney. Make sure you're bringing an accountant like me that does a lot of divorce work, family law work, to talk about this strategy and what it can mean for you. Because a lot of attorneys are not accountants, and they shouldn't be. So they aren't really sure about the law, and they're very busy, as we know. So you want to make sure this can handle. But let's say you're in a permanent alimony situation on either the paying side or the receiving side. This could be a 30-year problem for you. Imagine we can get it to be, we can maximize the tax benefits for you just by having a simple conversation and trying to move the date of the final divorce around.
So if I'm hearing you right, if it's settled up, a divorce is settled up this year, then the person who's paying the alimony has that tax deduction. For the individual receiving the alimony, it's income. It's changing if it's settled next year. But my question would be, it's going to be grandfathered in. And the reason I'm bringing that up is if it's settled this year, that's how it's going to be handled. Even if it's 30 years of alimony, because it was settled in 2018, that's how it will be treated because you got it in 2018.
Yes.
Okay. That's interesting. And let me ask you this, Chris, because I'm thinking, okay, if I am an attorney and I'm settling this up for my client and I'm realizing, okay, it's going to fall into 2019, well, let's say I'm planning, let's use $10,000, $10,000 a month, but now because I know I'm paying this alimony and the case isn't settling to 2019, wouldn't it make sense for the attorneys to set something and say, well, because this individual is not going to get the tax deduction instead of $10,000, it's now, let's say, make it $8,000. And because that person is receiving that alimony without income tax, it's going to work out for both sides that way. Is that is that one way to look at it?
Yeah. So the alimony being paid, right? So when you consider alimony payments and child support payments,
right?
The after tax effect is included. So, but now if someone were to be paying $10,000 in 2018, well, they like you said, would have a net after tax of, let's say, $7,000 for the person paying the alimony. And so, of course, but now they can't be paying $10,000 in 2019 if it settles then, because they don't get the tax benefit. So overall, it's very significant that attorneys realize this, because there's negotiations going on right now that imagine we don't settle till 2019, the amount of alimony I'm paying has to go down. I urge everyone, and also the amount of alimony you're going to be getting.
Right.
So so now the alimony is going to be not taxable to you. So I can take less than that and still be whole. So it becomes a whole different negotiation strategy for everybody.
So the numbers would work out. Okay, yes, I'm losing the deduction, but if what I'm now paying, instead of $10,000, I'm paying $7,000, and for the person receiving the alimony, yes, I was going to get $10,000, but now, since it's now 2019, I may be able to receive less, that $7,000, and the numbers would work out. I would think, especially for cases that are in place right now, if there isn't a way to get it to be settled up for 2018, this would probably be the strategy going into 19.
Right.
And this is important.
A word of caution that under the new plan, if we did do, as we simplified it, if we did go from $10,000 of alimony to $7,000, that don't forget that sometimes the payer of alimony is in a higher bracket. So this hurts. It will hurt the recipient of alimony if we did it that simply.
Sure. Because
the recipient of alimony is in a lower bracket. Let's say that the payer is in 30% brackets, right? So $10,000 of alimony,
great point.
We get a 30% reduction in tax. Great, that's $7,000 net. But what if the recipient's in a 15% bracket? So she,
a different impact. I understand.
Right,
that makes sense.
Right. So she or he getting the alimony, they would have gotten $10,000, only paid $1,500 of taxes, and then so they would have net out $8,500. So this is really a word of caution for people that are going to be receiving the alimony, is that we simply can't look at the tax effect on the payer, your former spouse, and then accept that new net number as your alimony, because that's not fair either.
That makes sense, Chris. And I hate to do this. I'm being told that we need to wrap up. But before we do, this is where we like to slow down the show and put the spotlight on you, Chris. Please tell the listeners, for anybody that may need some assistance, where they can get a hold of you, a phone number, a website where they can look you up.
Phone number, of course, first, please call me on 732-673-0510. You can reach out to me on my website, which is full of great information, at chriswhalencpa.com. That's ChrisWhalencpa.com. And you could also email me directly at chriswhalencpa@gmail.com.
And on your website, you had mentioned you have different case studies on different tax situations that people could look at to say, well, that may be applicable to me, and here's an example of a particular tax filing. You have different ones that are set up on your website.
Yes, if they go to my blog page, you'll see a lot of information. Like I said, case studies. I do videos and memos. And also, if you have a very specific question, email me or call me, and I can send you a post, or I could talk to you, specifically about your situation. That's what I'd prefer. If you have a question, I tell everyone, the moment that you feel you want to hesitate to call me, dial my number.
Chris, like always, thank you so much for being here. That was a lot of useful information. And Zach, that band never fails.
There they are, Dave, wrapping it up for us.
Thank you, everybody, for listening. My phone number, 732-657-3089, or go to my website, www.davidcrossan.wfadv.com. Go on there to see different articles and videos on investment and estate planning strategies. Have an amazing week, and let's talk next time. Take care.
The
Lighter Side of Finance is a paid program. The views and opinions expressed in this program do not necessarily represent the views and opinions of the staff and management of this radio station or Town Square Media, LLC. The purpose of the program is to provide information only. Any financial transaction can only be recommended by a knowledgeable professional who is familiar with your financial situation. Wells Fargo Advisors, LLC is a registered broker-dealer and a separate non-bank affiliate of Wells Fargo and Company.